Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about a new SPAC to the channel and one which I personally am quite excited by. That SPAC is PDAC, Peridot Acquisition Corp, and its proposed merger with Licycle, the lithium battery recycling business. Now personally I'm quite excited by this one. There clearly are some risks, however in my view there is an underlying compelling investment opportunity here. In this video we'll cover absolutely everything which you need to know about PDAC and the merger, all the positives, all the negatives, the valuation, and ultimately what my position is on this. As part of this, we are going to cover a number of things I haven't seen anyone else talking about, so if you're interested in this SPAC, then you definitely don't want to miss this one. If you're new to the channel and you like investing related content, then hit that subscribe button. The YouTube algorithm doesn't like my unpredictable upload schedule, and as a result, oftentimes my videos aren't showing up on people's homepages. If you want to make sure you don't miss out when I upload a video, hit that bell button, and in that case it should hopefully show up on your homepage. The channel now also has its own Patreon page. It's very different from any other ones I've seen on YouTube before, so if you're interested in that, check the link in the description below. There's a video explaining what it entails, and hopefully see you over there. If you like the video, please smash the like button, it's so helpful in pushing the channel to a wider audience. And as always, whilst my full-time office-based job is investing, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So, what does Licycle do? Well, ultimately, it's a lithium-ion battery recovery and recycling business. It has an approach to recycling batteries which is patented, and it enables it to do so in a more environmentally friendly way, whilst also enabling reuse of more of the battery metals in the battery. It was founded in 2016, and in December 2019 was when the company had its first completed shipment of recycled batteries. But now, let's go into the positives. What is there to like about Licycle? Now personally, the first positive I see is the massive amount of tailwinds there are that are going to support the growth going forward for Licycle. So many of these tailwinds are driving the adoption and the growth in the EV market and also the more broader battery storage market. And as a result, there's a massive need and a growing need for the recycling market to respond to that and adapt to that. So the first tailwind is the fact that battery growth is huge, both historically and forecast. In 2015, the sum of all the factories globally focused on battery manufacturing was 57 gigawatt hours. Fast forward to January 2021, that's 3.6 terawatt hours. What's more, in 2020, there was $65 billion of capital committed to battery manufacturing. Now this massive growth in battery manufacturing is obviously really important for the recycling market as well. Now, whilst a lot of this is led by EVs, it's also important for the wider battery storage market, which is also growing and also very interesting. If you haven't checked out my video a while ago which I did on STPK Energy Transition Corp and its merger with STEM, then I definitely recommend you checking out that. There I give some colour on the battery storage market and why it's so interesting, why it is going to play an increasingly important role in our economy going forward. However, ultimately, this is all very good news. More batteries means ultimately more batteries which need to be recycled. All these batteries have a life cycle associated with them. They include important precious metals which can be recycled and can be reused, and we'll come on to why that is so important in a second. And ultimately at some point in time, these batteries are going to need to be recycled. What's more is when batteries are manufactured, there is typically some wastage and some off-products which need to be recycled as well. So before those batteries themselves need to be recycled, as the production increases, there's this ongoing demand for recycling. Now the next tailwind is the growth in the lithium price and the price in other battery metals. Now this is a market which personally I have been interested in for a while. Anyone who's familiar with it will know that there's a growing imbalance between the supply and demand, which ultimately is driving up a big increase in the price. Not only is this important for lithium, it's also important for other battery metals in the anode and cathode of batteries. What's more, given that demand for battery metals is growing faster than the supply can keep up with, given the time it takes to find a mine, open it up and make it operational and be able to get battery metals out of the ground that are in a usable state, this supply-demand imbalance is just increasing and ultimately is going to drive long-term the cost of these metals up. Now this is really good for Licycle. As the price of these battery metals goes up, they can generate greater revenues from selling those metals that they've recovered from batteries. And ultimately, because the cost of recycling those batteries remains unchanged, all of that incremental revenue from the higher price flows straight down to the bottom line and to the profitability. Now recycling batteries is also very important when you think about the need to have domestic supply. This leads us very nicely onto the next challenge in the sector currently, which is around the concentration to China for certain battery metals. China currently is and is forecast to be a leader in the market, and ultimately there is a need to onshore and de-risk some of this concentration to China. This will likely drive more investment into the space, potential for government subsidies, all of which are very positive for Licycle. Having any domestic supply of lithium or battery metals at all from recycling is really important. Again, this positions Licycle very well to benefit. The next tailwind that's important to discuss is ESG. Now, not much needs to be said here. The focus of driving the electrification of transport and of battery storage and greener grids is all with the ESG, the environmental benefits, in mind. As part of this, you have to have an effective and reliable way of recycling these batteries. If there's no infrastructure for this, you'll find that in 20 years' time the seabed is entirely littered with used batteries, and you have an environmental crisis on your hands. Ultimately, this is a green initiative being driven by governments, both in the form of new regulations being introduced requiring battery manufacturers to ensure that certain recycling targets are hit, as well as introducing subsidies to support this. In short, this is great news for Licycle. Now, the next real positive I see that we need to discuss is the patented approach and how it's differentiated and superior. Now, very broadly speaking here, there's two main ways of battery recycling. One which is less environmentally friendly and where you can't recover any of the battery metals, and another way which is more environmentally friendly and more of the battery metals are reusable and recoverable. Licycle sits in the latter. Now, putting aside the environmental argument here, as the price of lithium and other battery metals increases, it increases the economic argument and the economic rationale for the second method, the camp that Licycle sits in, where more of the battery metals can be recovered and reused. As mentioned before, Licycle's approach is patented and is much greener and ensures as much battery metals as possible can be recovered, can be reused, and ultimately can be sold on. Now, the next real positive I see with the business is the spoke and hub model that they're operating. Now, I like this because not only is it the most scalable model, it's the most cost-effective model, and also with it comes barriers to entry. It builds greater barriers to entry and positions Licycle more competitively. Now, the way this works is that batteries are initially brought to the spoke. Here they're shredded, certain things are sold immediately, the ground plastics, the shredded aluminium, the shredded copper for example, and then the remaining materials are taken to the hub, where they're extracted, recovered and refined. Now, this is quite clever because ultimately the weight of the battery decreases so much between the spoke and the hub. The spokes are located close to the customers where they have contracts with for their batteries, and ultimately the weight is decreased so much so, all the non-value add parts are removed, the weight is decreased so it can then be transported to the hub for the processing, for the value added steps. This ultimately makes sure that the process is much cheaper and much more effective. An alternative model would be that you'd have either much more expensive hubs, or alternatively you'd be incurring massive transport costs taking those heavy batteries to the hub sites. And this is great because once it's established, it also acts as a great barrier to entry. For competitors to be able to operate on similar margins, they have to incur massive costs and set up a similar model themselves. Or alternatively, they're unable to operate at the same levels of profitability. Now, personally, I think this is great. It's something I definitely like to see, and it's clear there is some first mover advantage here. And it's great to see Licycle capitalising on that. What's more is that given battery manufacturing plants do take some time to be constructed, it allows Licycle to plan its manufacturing footprint very carefully and very strategically. Again, that's a real positive. The next real positive I see is around the financials. Now, there's a great degree of visibility. We know how many EVs are on the road, we know how many batteries are being manufactured, we know how many battery storage facilities there are. All of these have a life cycle, and we know at some point they will need to be recycled. That gives a good degree of visibility. Licycle also has a very attractive financial profile. It has customer contracts on both ends of the equation. Firstly, on the supply of batteries to be recycled, it has contracts with customers who will be providing those. Those are battery manufacturers, EV manufacturers, and a range of other customers. Then, following the recycling of the batteries, it has offtake agreements with customers who will then buy the lithium and the other battery metals from them. This makes it pretty resilient to any cyclicality. Now, the next positive I see around financials is around the unit economics. Now, I'm not going to say too much here, but with this chart in mind, it's clear that if they reach a scale that they're saying they will, and they deliver on their plan, the unit economics here are extremely compelling, both for the hubs and for the spokes. Overall, if management deliver on their plan, this is an extremely profitable business. Now, one important thing to bear in mind when looking at this is that obviously this comes from a sales document. The investor presentation is designed to entice new investors into the company. That being said though, it's clearly a very high margin business once it's reached scale, and that's important to keep in mind, and we'll come and discuss that in a moment. Now, the next positive I see here is around the transaction dynamics. So in this deal, the existing shareholders in Licycle are rolling 100% of their proceeds. What that means is that they're not taking cash off the table now. They're not de-risking their own personal financial position. Now this is great to see. In some SPACs you see the management teams taking what are life-changing sums of money off the table and de-risking themselves. The management team here aren't doing that. They're 100% invested in the business for the long term. In this scenario, what's also great to see is that some of the existing shareholders in the business are reinvesting further into the business and are coming into the pipe as well. Again, that's not something you see all the time, and it clearly shows their commitment to the business long term and their belief in management's ability to deliver on the strategy. Now, another positive that's worth mentioning is around the management team. They're clearly very experienced, they have good sector expertise, good credentials, they clearly know what they're doing, and personally I believe this is a management team well positioned to deliver on the strategy. Now, before we jump into the negatives, let's talk about the valuation, because ultimately this can be viewed positively or negatively depending on what your overall view of the company is. Now, with Licycle, there's absolutely no escaping the fact that the valuation is completely underpinned by the growth. Ultimately, the business has to deliver on its growth strategy to justify any of the valuation whatsoever. If you don't believe it can capitalise on the growth opportunity and it won't deliver the growth it's forecast to, then ultimately the business is very, very overvalued. However, if you, like I do, believe that the company can deliver on its growth plan, then in fact there is a strong argument for the case that the company is undervalued. However, let's dive into the valuation analysis to understand whether the company is undervalued. Now, separately, I will create a video focused purely around the valuation here because ultimately it's too long just to do in one video. I have shared the valuation files and analysis in the Patreon group, but a separate video will be coming soon. The first thing we need to say, however, is that actually by looking purely at the investor presentation, some of the figures are slightly misleading. Look at the valuation multiples page, for example. They're not comparing like for like, they're not comparing same year multiples with same year multiples. To make them comparable and to give them meaning, we need to adjust those slightly and put them on the same basis, the same 2024 basis. The reason we want to look at it on a 2024 basis is that's when the business has achieved a bit more scale. By then it's forecast to be generating just a little bit under $340 million of EBITDA. And knowing the average growth rates for the average multiple for the peers, we can forecast what those multiples will be on a 2024 basis to compare against. And personally, I think the most comparable peers here are the waste management and recycling players, as well as the lithium producers. Now, I know some people here will argue that actually it's not fair to compare it to the waste management and recycling peers because ultimately the sector is very different. There, the sector is mature, the growth rates aren't as fast whatsoever, and it's just more mature and more established. Yes, I completely buy that argument, and I do fundamentally agree that Licycle should definitely be valued at a premium to there. However, it is a good foundation, and we can use that as a basis for some conservatism as well. So now we've got all the multiples on an FY24 basis, we can then compare and understand whether Licycle is undervalued versus the peers. We can look at this in three ways. We can look at it as the average across all of the different sectors which Licycle is compared to in the investor presentation. We can look at it against those which I believe are slightly more comparable, the waste management and recycling and the lithium producers. And then as an upside, we can compare it to the valuation of the lithium producers. The exact detail of how this is done, I've covered and is included in the Patreon group, and as well as that, I will be covering in a separate video in due course. However, the output of that is as follows. On the basis of the average across all of those sectors, that implies a share price of around $28. Looking at the average of the waste management and recycling and the lithium producers, that gives you an implied stock price of around $34. And when comparing it to multiples just from those of lithium producers, that gives you a share price of around $38. Now again, before people come at me in the comments, this is purely indicative. Yes, there are things that will impact this over the course of time. For example, there will be some dilution from warrants, etc., which isn't factored into this analysis. So this is ultimately high level, indicative, and directionally correct. That being said, this is all entirely dependent on the company delivering on its growth plan and being of a scale of around $340 million of EBITDA by FY24. So now, let's discuss the negatives and the potential mitigants against those. So firstly, and a real risk in this situation is around the execution risk. This is a very real risk here, given the size of the company and given the stage it is at in its development. Typically, I don't like investing in companies at this earlier stage in their development. As a reminder, last year it generated $1 million in sales. A business of this size is also burning cash, and to justify its valuation has to grow really, really quickly. When thinking about this risk, I do think there are some potential mitigants here. Firstly, a lot of the growth is actually underpinned by existing contracts, both on the supply side, i.e. the batteries to be recycled, and also on the offtake side. In addition to that, the spoken hub model which is discussed and which is key to the plan being delivered is also being executed as we speak. The first hub is being constructed, and again, that's great to see. That being said, whilst they are mitigants, there's clearly no escaping the fact that the company does have to grow really fast to justify the valuation, And also the fact that there is inherently, given the size of the company, a degree of execution risk that if we want to invest in this, we just have to get comfortable with. Now the next real risk I see here is that of cost overrun, the risk that actually more capital needs to be raised to fund the growth. With companies of this scale, there's always the risk that they've undercalculated, miscalculated, or just underestimated the level of capital they'll need to invest to deliver on the growth. If that is the case and the company needs more money, there's a very real risk that they'll have to turn to an equity raise, ultimately meaning new shares will be issued and us as existing shareholders would be diluted. When thinking about this, I do think there's perhaps some conservative in the plan which mitigates this. Firstly, we do know that the price of lithium and other battery metals are going to increase. And we know as that happens, the margins which Licycle generates will go up, given that that incremental margin all falls down to profitability. So firstly, that should help in terms of cash burn. Secondly, I think the company also could perhaps, once it's scaled and reached a certain level, potentially reach out to the debt markets and raise debt rather than equity. And what's more, I do think there is the very real possibility over the life of an investment in this company that actually the company could be a beneficiary of some government support, some government incentives, or perhaps some green focus stimulus. Now the next potential negative I see is the need to be patient here. Now this is only going to affect a certain subset of investors, as ultimately this plays better to a long hold rather than a short-term investment. This is not a company that in its first quarters of results are going to wow investors with massive growth. No, we know what the plan is, we know it will take some time to deliver that, and we have to have confidence in management over that period of time that they will deliver it. So ultimately, we as investors need to have patience. If this requirement of patience isn't for you, then this is something you should really consider before making this investment. Rome wasn't built in a day, this company has a massive opportunity ahead of itself, but it will take some time to deliver on that strategy. Now the next potential negative I see here is around the challenges and the risks that it faces entering into international markets. Now clearly, as you can see from the investor presentation, international expansion is key to their plan, both in Europe and into Asia. However, there are some challenges that come with this, which the company hasn't yet faced in its domestic markets, and which are really important to consider. When thinking about expanding into Europe and Asia, despite the fact that the actual land mass itself is not that dissimilar from that of the footprint of the North American market which it currently operates in, one important thing to consider is the fact that there's a lot more borders, there's more countries in those areas, and with it that comes more politics, more red tape, and more bureaucracy. For example, there may be real challenges around transporting waste between different countries, and working around these regulations and getting comfortable with those is something which may slow down and may challenge international expansion. Now, I'm not saying it's impossible, I'm just saying it will come with more red tape and it will be a slower process. Now, whilst they haven't started this at all, once they do start, it is something which I personally will be keeping a very close eye on. However, it is all quite mitigated by the de-risked approach they have to international expansion. Ultimately, they have customers which they'll contract with for the supply of batteries to recycle, taking away the risk around that part. And then ultimately they will also enter into offtake agreements with parties who will buy the recycled materials, again, de-risking that whole part. So ultimately, I do see this as a very de-risked international expansion opportunity. They're not going to blow themselves up by trying to plant flags all over the map, which can be the case in certain sectors. So I like that, but I do think there's a real risk that actually we see the international expansion part being a lot slower. Ultimately, that has a knock-on impact on the financials, and so as investors, it's definitely something worth keeping in mind. So, what am I doing? Well, I have taken a position in this company. I'm really excited by the long-term potential the company has. However, I'm not blind to the fact that there are risks associated with this. I do feel there are really strong tailwinds supporting the growth of the company, and I do really believe there's a necessity of this offering as the whole battery ecosystem evolves. So I believe it's positioned very favourably as a result of that. As I mentioned before, this for me is a long-term investment. Whether the price dips or it doesn't dip post-merger is not ultimately something that will concern me. I look to hold this stock for a number of years as I see management execute on the strategy, deliver on that, and deliver the growth that they're forecast to. But look, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel and you like investing related content, then hit that subscribe button. If you're interested in more content and different things, check out the Patreon. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear everyone's thoughts, perspectives, opinions. So please get involved. Thank you so much for watching, and I'll see you in another video.